Hello and welcome to Calling Monster Finance. It's September 15th, 2025. Today, the U.S. markets kicked off a pivotal week on a decidedly bullish note, with both the S&P 500 and the NASDAQ composite climbing to new record highs. The session was characterized by a clear, risk-on sentiment, as investors grew increasingly confident that the Federal Reserve is poised to deliver its first interest rate cut in 9 months. However, the rally was not without its complexities. Beneath the surface of the headline gains, we saw significant divergence among sectors and even within the high-flying technology space itself. Coming up, we'll break down the key drivers behind today's rally, including the powerful anticipation of a Fed policy shift and a mix of geopolitical signals from U.S. China relations. We'll also analyze the specific company news that sent shares of Alphabet and Tesla soaring, and examine the structural shifts happening across the market. The main story on Wall Street today was one of powerful optimism. The S&P 500 advanced by 0.47%, while the tech-heavy NASDAQ composite led the charge, gaining 0.94%. This upward momentum was fueled almost entirely by the widespread conviction that the Federal Reserve will cut interest rates at its policy meeting later this week. This anticipation of easier monetary policy created a strong tailwind, encouraging investors to look past recent data showing inflation remains stubbornly above the Fed's target. The market's focus has clearly shifted, with traders betting that a cooling labor market will give the central bank the green light to begin an easing cycle. Adding fuel to the fire were constructive developments in U.S. China relations. Comments from President Donald Trump strongly hinted that a resolution for the U.S. operations of TikTok was imminent. This was interpreted by the market as a significant de-escalation of geopolitical tensions, further improving investor sentiment. Leadership today was concentrated in the mega-cap growth stocks that are most sensitive to interest rates. Alphabet was a standout performer, with its shares rallying 4.49% after a price target increase from Citi. This surge pushed the company's market capitalization past the $3 trillion mark for the very first time. Meanwhile, Tesla shares jumped 3.56% after a regulatory filing revealed that CEO Elon Musk had purchased approximately $1 billion worth of the company's stock on the open market, a strong signal of insider confidence. But the picture in the technology sector wasn't uniform. The semiconductor industry faced a specific headwind after China's market regulator accused Nvidia of anti-monopoly violations. While Nvidia's stock showed remarkable resilience to close nearly flat, the news created a clear point of divergence within the market's otherwise strongest group. Overall, the session was defined by this singular focus on a dovish Fed pivot, a view that was reinforced by moves in other asset classes. Bond yields fell, with the 10-year Treasury yield dropping to 4.03%, and the U.S. dollar index weakened by 0.21%, both classic indicators of a market positioning for lower interest rates. Let's take a deeper look at the two primary forces that shaped today's trading. First foremost was the Federal Reserve. While the central bank was silent today, the entire market narrative was built around its upcoming policy decision. Investors have now fully priced in a 25 basis point interest rate cut, viewing it as a near certainty. This conviction stems from recent economic data, including downward revisions to job growth figures and a rise in weekly jobless claims, which suggests the labor market is cooling faster than previously thought. The market's interpretation is that this softening will compel the Fed to shift its focus from fighting inflation to supporting the full employment side of its dual mandate. However, the Fed faces a difficult balancing act. Core inflation is still running at a 3.1% annual pace, well above the central bank's 2% target. This creates a challenging dynamic where the Fed must weigh the risk of an economic slowdown against the risk of allowing inflation to become entrenched. The market's bullish stance today shows that investors are betting the Fed will prioritize growth. This sentiment was clearly reflected in the bond market, where the 10-year Treasury yield fell to 4.03%. The key question for the markets now is not about this week's cut, but about the forward guidance Chair Jerome Powell will provide for the rest of the year. The second major driver was a complex set of signals on the U.S. China geopolitical front. On one hand, we had a significant positive catalyst. President Trump's social media posts hinting at a resolution for TikTok's U.S. operations were seen as a major market-friendly de-escalation. This removed a key point of uncertainty and contributed directly to the risk-on tone that lifted the S&P 500 by 0.47%. On the other hand, we saw evidence of continued targeted pressure. China's market regulator announced a preliminary finding that Nvidia had violated anti-monopoly laws related to a 2020 acquisition. This news injected a dose of uncertainty directly into the semiconductor industry, a strategic flashpoint in the U.S. China tech rivalry. While Nvidia stock ultimately weathered the storm, closing down just 0.04%, the move highlights how Beijing can apply precise pressure on key U.S. industries, even while broader diplomatic tensions appear to be easing. Today's session was also influenced by commentary and actions from two key figures, President Donald Trump and CEO Elon Musk. President Trump's statements, delivered via his Truth Social platform, were a net positive for market sentiment. The most impactful was his post suggesting that trade talks had gone very well and that a deal was reached on a certain company, which was widely interpreted as a forthcoming resolution for TikTok. This news provided a tangible boost to the market at the open by reducing a significant source of geopolitical risk. The president also reiterated his call for a big cut from the Federal Reserve. While this underscored the political pressure on the central bank, it largely reinforced market expectations that were already priced in based on economic data. For Elon Musk, it was his actions, not his words, that moved the market. Regulatory filings revealed that the Tesla CEO had purchased approximately $1 billion of his company's stock. This was seen by investors as a powerful vote of confidence in Tesla's future, overriding recent concerns about sales and competition. The move acted as a direct catalyst, sending Tesla shares surging 3.56% to close at $410.04. This financial commitment was the key driver for the stock today, with investors largely ignoring unrelated and controversial political comments he made over the weekend at a rally in London, which had no discernible impact on trading. While the major indices painted a picture of broad strength, a look at the sector level reveals a more nuanced story of clear rotation and divergence. Today's rally was led by the sectors most sensitive to the prospect of lower interest rates. The clear winner was communications services, which surged an impressive 2.34%. This outperformance was overwhelmingly driven by the massive 4.49% gain in Alphabet, as it crossed the $3 trillion market cap milestone. The consumer discretionary sector was also a top performer, finishing the day up 1.09%. This was largely powered by the 3.56% jump in shares of Tesla, following the news of Elon Musk's significant stock purchase. This risk-on appetite meant that capital flowed out of more defensive areas of the market. The biggest laggards were consumer staples, which fell 1.16%, and the healthcare sector, which dropped 1.01%. This rotation away from safety stocks and into growth-oriented names underscores the market's conviction in the Fed easing narrative. We also saw divergence within the technology sector itself. While mega-cap tech names like Alphabet, Apple, and Microsoft all posted solid gains, the semiconductor space faced headwinds. As we mentioned, the anti-monopoly probe from China created pressure on Nvidia, highlighting a key point of friction even as the broader tech index, the S&P 500 information technology sector, still managed to close up 0.822%. Now, let's take a moment to recap the closing numbers for today, September 15th. Starting with the major U.S. indices, the Dow Jones Industrial Average closed at 45,883.45, a gain of 0.11%. The S&P 500 index finished at 6,615.28, up 0.47%. The NASDAQ Composite ended the day at 22,348.75, climbing 0.94%. and the Russell 2000 index closed at 2,405.13, adding 0.34%. Turning to volatility and yields, the CBOE Volatility Index, or VIX, rose 6.30% to 15.69. The yield on the 10-year Treasury note fell slightly to 4.03%. In currency and commodity markets, the U.S. dollar index declined 0.21% to 97.34. Collisions, the USD-JPY currency pair stood at 147.33. Both crude oil gained 0.94%, settling at $63.28 a barrel. Bottom's Brent crude oil was up 0.69% to $67.45. Rose 0.90%, closing at $3,719.50 an ounce. And the Bitcoin USD price was down 0.32% at $115,359.30. And here are the top 5 most actively traded stocks by turnover today. Number 1 was Tesla, which gained 3.56%. Second was the S&P 500 ETF SPDR, up 0.53%. Third was the Invesco QQQ Trust, which rose 0.86%. Fourth was Nvidia, which finished nearly flat, down just 0.04%. Collisions. And number 5 was Alphabet Inc., Class A, which surged 4.49%. In summary, U.S. markets began the week with a powerful rally that pushed the S&P 500 and NASDAQ to new records. The day's bullish sentiment was driven by a potent combination of factors: overwhelming investor confidence in an upcoming Federal Reserve rate cut, and positive geopolitical signals suggesting a de-escalation in U.S. China trade tensions. Leading from mega-cap technology and growth stocks propelled the market higher, though clear divergences were visible, with defensive sectors lagging and the semiconductor industry facing unique headwinds. Looking ahead, all eyes will be on the Federal Reserve. The market has already priced in a rate cut, so the key variable to watch will be the central bank's forward guidance and Chair Jerome Powell's commentary on the future path of monetary policy. If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments.